Okay, and thank you and welcome to this extraordinary meeting of the Audit and Risk Committee. I'm sitting in for Councillor Hodson, who's unwell, and I'm sure I speak for the entire committee in wishing her well and hoping for a speedy recovery. Can I remind all members and attendees to turn off their cameras and microphones until asked to speak? And can I ask Phil, Mr. McCausey, if you could do roll call?
Certainly, Chair. Members, if you wouldn't mind turning on your video first and then acknowledging your presence, please. Councillor Bird.
Good evening.
Councillor Burgess-Joyce.
Good evening, Mr. Chair.
Councillor Cannon.
Good evening and a happy new year to everybody.
Councillor Cox. And likewise, Councillor Cannon.
Hello, present.
Councillor Greaney.
Good evening, present.
Councillor Hayes.
Good evening, present.
Councillor Jones.
Yes, I'm here, and do excuse my dog barking. I can't stop it.
Councillor Kelly.
Good evening, present.
I understand Councillor Lewis is delayed, and perhaps we could note when he joins the meeting. And finally, that just leaves yourself, Chair, so we can see you. Thank you, members.
Thanks, Phil, and thanks, members. Okay, so this meeting will be webcast and a record retained on the council website. For those at home viewing the webcast, I would like to inform you that if you look above the video, you'll see a resources tab. Select this and the link to the agenda will appear on the right hand side. This will allow you to open the agenda in PDF form and follow the discussion and debate. Can I ask, have we had any apologies for absence?
No, Chair. No apologies, just simply an apology for delaying, as explained earlier.
I've got an apology from Councillor Hodson and Councillor Hayes will be deputising. Okay, can I invite members of the going declarations of interest? Okay, so move on to the main item of business, which is the 2019-20 statements of accounts, and understand, Di, you'll be presenting this report.
Yes, thank you very much, Chair, and happy new year to members. I'd like to bring to the committee the final audited accounts that were originally presented to you in September and then again in November, where we've brought updates as the draft accounts have progressed. The external audit for the council and the pension fund now has been complete by Grant Thornton, and this evening what they will do, they will provide their findings reports to you. So it's two separate reports, one for the Wirral Council findings report and one for the Merseyside pension fund. The committee have a statutory obligation to approve the statement of accounts, to note and comment, and this is welcomed, along with the annual governance statement, which has been brought previously to the committee. And there was one minor amendment, which I will bring to your attention later. The findings reports are set out in Appendix 3 and 4 of the paper, so I appreciate it's a very long document, and there for note are on pages 199 and then page 257, and I say they'll be presented this evening by Grant Thornton. So the recommendations that I'm asking the committee to do this evening are to note the changes to the council's accounts as set out in Appendix 2, which is on pages 195 to 197, and I will refer to those in a moment. These have been made from the draft accounts to the final accounts. They've been agreed with the auditors where changes have been made, or agreed where they're not material, and we have a couple of those which I'll discuss with you. To also approve the accounts of the Wirral Council and Merseyside Pension Fund in Appendix 1, and to approve the annual governance statement set out in Appendix 3 on from page 275. If I can just bring your attention to the annual governance statement to start with. On page 297 of the document, we've added an additional paragraph under the section Financial Resilience. I think we brought this and discussed it at the November meeting. Apologise if we didn't. But this is actually updating the annual government statement to take into account now the capitalisation directive that we are applying to. We've applied to the Ministry of Housing and Communities and Local Government, commonly known as MHCLG. This sets out the deficit for 21-22 after the compensation of sales fees and charges scheme, which we can recover some funds through the government for of 9.3 million. If I could direct the committee to Appendix 2 on page 195 to 197 of the pack, if that's okay. I'll just go there myself. 195. So this actually, on page 195, this sets out the changes that we have made to the accounts. There were a total of 21 changes from the draft accounts. The vast majority of them were narrative or small minor changes. I'm pleased to say that all bar 3 changes we have made, and for the changes that we haven't made, they're either not material, they were a narrative or presentation, and I'm quite happy to discuss each of those in turn, the 3 that we didn't change. So the first one was, I think I brought to the attention of the committee in November, was where through the external audit testing of existing assets, we identified 895,000 of assets that no longer existed. We have subsequently done an exercise to give the auditors and to bring to the committee assurance that there are no further material misstatements within the accounts regarding those assets. A further change, change 3 on note 42, is around what's commonly called the concession rearrangements, PFI liabilities. The auditors believe we have got what's called a onerous contract because of the Kingsway School, where at the moment it is not being used for this, obviously as a school, it is closed. However, we still have a liability to pay for the contract. Now, it doesn't change the balance sheet at all, it's just how we would present that liability within the balance sheet. So it's not increasing the liabilities and it's not decreasing them, it's just presenting them in a different way. And finally, the final change that we didn't make was point 13, which the exit packages were misstated by £5,000, and that's not material, but we will correct it obviously for the restatement for next year, just to make sure everything is proper and in order. So those were the changes that we've made. I'm happy to take any questions at this moment in time, because I'm assuming that members have had a chance to look at the accounts. But I would like to Mark Stocks from Grant Thornton to present the audit findings report for the council, and then Stuart Basnett from Grant Thornton, the pensions findings report, which he brought in November to you. Chair.
Thanks, Di. I think if we can reserve questions until Mark's spoken, and maybe we can take questions on the council's accounts and the auditor's opinion after following that, and then take Mr. Basnett's presentation on the pension fund accounts, and then we'll take questions on them. Okay. So, Mark, do you want to? There's no what you want to say.
Thank you, Chair. So I will I'll take you through the audit findings report. I'll sort of highlight the key issues that I want to bring to your attention. Due to the nature of some of the issues, it will be perhaps a little bit longer than I would normally do. So the audit findings report, for members, just starts on page 199 of the pack. And if I could take you to page 201, which deals with the headlines from the audit. So I'm pleased to say that the audit is now substantially complete. There's a a few areas that we need to, one area really that we need to work through, which is just obtaining a few council tax bills just to corroborate our final sample. But apart from that, the audit is pretty much complete now, subject to obviously you adopting the or approving the final set of financial statements tonight. What we intend to do is issue an unqualified opinion on the financial statements. It will include an emphasis of matter. An emphasis of matter isn't a qualification. It just sort of highlights particular points within the accounts that we think would be of importance to the reader of the opinion, but it's not a qualification. In terms of value for money, I do intend to issue what we call an adverse value for money conclusion, and that's, I suppose, the more significant qualification, because it is saying that we're not happy with the council's arrangements for securing value for money, and I'll talk quite a bit about that as we move through the audit findings report. So if we could just take you back to page 201. So this just deals with the headlines. We've discussed previously the main sort of impact on the audit has been COVID, not only from a point of having to work remotely, but also because of sort of some of the impacts that we've seen on the council's finances and on the work that it's meant we've had to do around going concern and so on. But overall, I'm really pleased with how the audit's gone. The council and the finance team have worked really cooperatively with us. So, despite the pandemic, we've got to where we need to, albeit a little bit later than I think we would all have liked. In terms of the financial statements, I'll do this in a little bit more detail as we go through. As Di said, we're not adjusting the accounts in any significant way in terms of the reserves available to the council. I think that's important to note. So there's no sort of major changes to the net income and expenditure of the council. We did spend quite a lot of time looking at gross income and expenditure. Unfortunately, the council had left a level of internal recharge within those figures, and something like £12 million was in there, but it was on both sides, so it basically overstated both income and expenditure. That's pretty much substantially been removed now. I think there's a little bit left, but what's left isn't material. But that did, I suppose, take time for both ourselves and the council's officers in terms of sorting that out. The next point really is around some of the investment funds that the council has. One is the PSSIF and the other is the CCLA fund, and I've talked a little bit about that, and that's really about the classification of these investments, and that's important because over time some of those investments are classed as fair value through profit and loss, which in non-audit speak means that if there's a profit or a loss on those funds, then it actually goes straight through the council's accounts and would impact on its general fund. So, depending on whether those funds increase or decrease in value. Now, at the moment, there's a statutory override all the way up to 2023. But it is something that the council needs to be aware of, because if that statutory override isn't extended, then if there is any loss from those funds, then it will directly impact on the general fund reserves available to you to actually spend. And in terms of the accounting, we felt that they were misclassified initially, but now they're actually in the right place in terms of the disclosure notes. As I said earlier, just on the third paragraph on page 201 in the second box, so we would intend to issue an emphasis of matter. What we've found, not only at Wirral but across all councils, is that the valuers of your property, whether that's through the council's assets or through the pension fund, have identified what we call material uncertainties in the valuation of assets, which effectively means that it's quite difficult to give a clear and thorough value or for assets due to the pandemic, because there's so much changing within the market. So what we do within our opinion and within the disclosure notes in the council's financial statements is just draw attention to that, just so that the reader could understand that, you know, the valuers have done their best to give a value for the property within there, but clearly is going to be influenced by, you know, COVID going forward, and certainly was at the reporting date. Just turning over to the next page, page 202, that just sort of highlights where we are with the audit. As I said earlier, most of those points that we were clearing are now done. So, and all that we're left with is some council tax bills around debtors, but I don't see that should hold us up beyond the end of the week in terms of issuing the audit opinion. Just moving on to page 203, as members will be aware, we work to the NEO's Code of Practice that sets out the work that we're required to do. So as well as the opinion on the financial statements, the NEO require us to issue what's termed the value for money judgment, which is effectively as looking at your efficiency, economy and effectiveness as a council, and making a judgment as to whether that's appropriate and the proper arrangements are in place. As I said earlier, we would intend to issue a qualified adverse opinion on value for money. That's all to do with the financial sustainability of the council. I know members have previously been briefed on this, but just to talk you through some of the highlights on page 203. So clearly 1920 was a difficult year financially for the council, so it was able to achieve a balanced position, but it only did so through the drawing of around £25 million from reserves, although we do note that there was a transfer of 7 million in, so effectively a net use of reserves of around 18 million. From my view as your auditor, I don't believe that's sustainable. You know, while I note that the council considered that a lot of this was used for one-off expenditure, it's not sustainable for you to continue to draw from reserves. Eventually those reserves run out, so it's important that you do get back onto what we'd call a recurrent basis in terms of your revenue expenditure. I think this is this made quite clear really just through the impacts of COVID. You know, the impact on the council has meant that you've not been able to deliver some of the savings plans that you'd hoped for in 2021, and so at the moment you're forecasting a deficit for the financial year of around 14.7 million. And then looking forward into 2021, there's something like a 40 million sort of deficit that the council needs to deal with. My discussions with the Chief Executive and the Director of Finance, so that the council's applied for a capitalisation directive to allow you to take some of that revenue expenditure both in 2021 and 21-22 and effectively treat as capital. You would have to borrow to enable you to finance that sort of capital expenditure, but it is a solution to you in terms of trying to balance the books at least for the next two years. Clearly that decision isn't in your gift. That decision doesn't actually lie with you or with MHCLG. That actually lies with Treasury. And the last time I talked to the council before Christmas, you were still waiting to hear as to whether that would be approved. The capitalisation directive has particular significance for you. If you don't receive it, then you'll have to use the majority of your reserves to try and get back into a balanced position in 2021 and 21-22, and it's very likely that the council would need to issue a Section 114 notice that would prevent it spending anything other than statutory expenditure over the next couple of years. So it is quite a serious position to be in, and it's important that as well as sort of applying for the capitalisation directive, that the members continue to support officers in terms of identifying savings plans and making sure that you are returning more to a recurrent financial position. I will come back to that and talk to you it in a little bit more detail, because there's more detail in the later on in the report, but that's the headlines in terms of value for money. I'll just take you through the other, I suppose, salient parts of the report, Chair, if I may, and just highlight sort of the key areas for your attention. So back to the financial statement audit. So on page 206 to about 210, we deal with what we call the significant risks. These are the areas where we spend most of our time as auditors in terms of trying to understand sort of what's happening to the council and the impact on its financial statements. You'll recall from the audit plan that we highlighted COVID-19 as a key risk, and we discuss in detail the impacts of COVID-19 on page 206. But other than the emphasis of matter that I highlighted earlier, there's nothing in particular to draw to your attention. And similarly, moving on to page 207, there's nothing in terms of fraud in revenue recognition that I need to bring to your attention. And similarly, under management override of control, we look in detail at management override of control, because it's basically the ability of officers to or members to sort of circumvent the council's policies and procedures, and to put through transactions that didn't ought to be there. And that can be a number of things, whether it's through use of journals or whether it's through the use of accounting estimates. I'm pleased to report that we haven't found any evidence at all of management override of control. Our journal testing has come out appropriately, and when we've looked at estimates and critical judgments, they've been made fairly. Just flag to you that quite early on in the audit, we identified weaknesses in journal controls. As I said, those weaknesses hadn't been exploited in any way to actually override management of control, but we do get concerned where people can both post and authorise journals. Management share our concern, so they've responded immediately to the recommendation that we've made around journals, and more appropriate controls are now in place. Just moving on to page 208. One of the significant risks we look at in quite a lot of detail is the valuation of property, plant and equipment. And we go down to a great depth now, looking at issues like how things are valued, the obsolescence factors that are used. And quite a lot of my clients, the authorities have struggled in terms of pulling these valuations together. But again, I'm pleased to be able to report that there's nothing significant that I need to flag to you in terms of the valuation of property, plant and equipment. It's perhaps one of the better audits that we've done, although I'm sure Di and Naomi will comment that it does take a long time to get through the whole thing. There was a slight issue with the valuation certificate, but that was corrected. So moving on to page 210, that deals with the valuation of your pension funds. Clearly the pension funds are a really significant estimate within your financial statements. So again, we spend a lot of time looking at those. In particular, this year we've looked at sort of the response you've made in terms of the McLeod judgment, which is sort of a potential liability for local authorities. But again, the assumptions and estimates within the financial statements we think are appropriate. Just moving, so that's the significant risks, and then there are a few other areas just to flag to you. Page 211, at the last audit committee we talked a little bit around some of the valuation of vehicles and the fact that some of the vehicles had actually been sold, and there's an amount around 895,000 that was in the financial statement. So there's no loss to the council here, other than the accounts weren't correctly stated, because assets that had been sold had remained within the financial statements. And then moving on to page 212, I just highlight the issues that I raised earlier in a bit more detail, and that covers the public sector social impact fund and the CCLA funding that I talked about earlier, and the internal recharges issue that again I talked to you when I was going through the highlights. And then on page 213, it gives you a little bit more detail around the onerous contract that Di discussed when she was presenting the overall financial statements. The final section on financial statements, if I can just, there is more, but I'm just doing the highlights. So page 218 deals with going concern. Obviously, when we form a view on the financial statements, we have to take a view as to whether the council's a going concern. As you can see, our assessment covers 2 or 3 pages of the report. But just taking you to the final page of that, just to page 23. We are satisfied that the council's a going concern. Now, that doesn't sort of override any of the issues that I flagged earlier in terms of value for money. There's I suppose a different concept of going concern in local government, unless you're going to be discontinued, or if you the government sort of refuses to give you support, then potentially you could be a going concern. But on the basis of what we've seen and the cash flow of the council and the plans in place, then we are happy that the council remains a going concern. Just going to move you down to page 227 of the report, and this gives this starts the work that we've done in terms of value for money. I'm just aware that it's a long read, Chair, so I'm just going to give you the highlights of just of the points that I'd like you to take away. As I said, this is an adverse value for money conclusion. So this is me saying I don't think you have appropriate arrangements in for securing your financial sustainability. So it's something that you need to treat urgently. On page 29, under 2018, we just talk a little bit about the council's use of reserves in the past. And, if you look at whether it's 1819 or periods before then the council, has continued to use its reserves to balance its financial position. And I think I worry that has become a cultural issue with the council. I think it's really important that you do get back into a much more balanced position in terms of your revenue expenditure. In terms of 1920, I think that sort of reinforces it as well. You started the period with a reasonably with a budget of around excuse me, Chair. So you started 1920 with a budget of 273 million, but within that you'd assumed that you're only going to use quite a small level of reserves, but the outturn, just moving on to page 30, just saw you use a significant amount of reserves, because the expenditure almost immediately became more than you'd budgeted for, and in particularly around areas such as adults and children's, that expenditure was more significant than you'd planned. So I think there's something around sort of the efficacy of some of your budget setting processes and just making sure that you're not drawing down from reserves more than you need to, and that you're planning ahead for this service expenditure. On page 31, we talk a little bit about the reserves position at the end of March 2020. And on paper, the County Council had quite a significant level of reserves of around £97 million. But when you start to break that down into what's actually ring-fenced and what you can actually use, it soon becomes a much smaller figure of around 20 million, because part of that 97 million, for example, was COVID grants. So another part was 10 million for general fund reserves, and you really, as a county council, can't afford to go below 10 million for the general fund reserve, because otherwise you're putting yourselves at risk in case there's any other sort of impacts in terms of, I don't know, COVID or any other emergencies that you need to respond to. So in effect, you're working with around £20 million that you have in terms of emergency funding. So I'm not going to talk through everything on this report, Chair, but just to bring you onto 2021, which is on page 231 of the report. So again, so the County Council set a budget of around 304 million for 2021. It was a reasonably good year in terms that you hadn't anticipated drawing a significant amount from reserves. There was only 6.4 million that you'd anticipated drawing down, and then clearly that's been heavily impacted by COVID. And at present, sort of you're estimating that there's going to be a 14.7 million pound overspend for the year. As I said at the beginning, that has a significant level of impact on the council in terms of what it needs to do in terms of capitalisation directives and savings. And if I could just move you to page 233 of the report, you'll see that over the next 4 or 5 years, that there's a budget gap of somewhere between 40 to 61 million pounds that the council needs to cover. Some of that impacts immediately in terms of the overspend for this year. That certainly is going to be impacted if you don't get the capitalisation or capitalisation directive that you've applied for from MHCLG. And as you can see in the table on page 233, the significant savings that are already planned by the council, and that still leaves you with a cumulative deficit. So, as I said earlier, I think the situation is serious in terms of your financial position. I know officers have put in a plan now in terms of what needs to be delivered. That plan is dependent on the capitalisation directive. Hopefully you will get that. But the message for me is that even if you do get that, you still have a significant level of savings that you will need to make over the next year to bring the council back into recurrent balance. So in terms of summarising the audit, Chair, the financial statement audit has gone well. So I thought the accounts that were put together were a good set of accounts, and we would intend to issue a qualified opinion on the financial statements. In terms of value for money, it's an adverse value for money conclusion because of the council's financial sustainability. Thank you for listening to me. I'm more than happy to take questions.
Okay, thanks very much. Thanks very much, Mark. So I'll open up to members. So Councillor Burgess-Joyce first. Before you start, David, can I just ask members, once you've asked your question, you just set your hands down. It's been so helpful.
Okay. No, fair. Thanks, Mr. Chair. Appreciate that. Mark, always very interesting to listen to you. I never thought I'd ever say that I'd be interested to listen to somebody with an accountancy background, but I genuinely do appreciate what you say. Just a couple of quick questions, Mark. Just before Christmas, we had some very interesting support through Share with regards to no procurement order numbers, no payment. I mean, I'm just wondering, my first point is, are we more corporately disciplined maybe than possibly we were before? Are you starting to see that come through? Is that going to help us going forward, that we're only paying out what we are authorised to pay out? And the second point, and I don't know whether you can answer this, Mark, is we were very supportive in the regeneration meeting around the purchase of BTs at £2 million. One, I think it was a good buy, in fairness, but I can see where the council's looking to sort of spend that money. I'm just wondering your thoughts on that. I'm conscious that it's been in the press recently, but we certainly in regeneration were quite supportive of the purchase. So just a couple of comments. I don't know, Mr. Chair, whether you want to go down the route of the BT sale, but I'm actually saying those as a friendly gesture, not as a political one. Thanks, Mark. Thanks, Mr. Chair. Thank you.
Thank you, Councillor. So in terms of the, I suppose the control environment that the council operates in, I've not looked in detail at purchase orders, so I find it difficult to comment on that. So my instinct is that when I query things that aren't quite the way I think they ought to be, that management respond appropriately. So there's a will to make sure that controls are in place and are working. And what we'll do is we'll continue to work with officers and internal audit over the next few years just to make sure that that's as strong as it can be. But I think where controls aren't operating, it's not for the want of trying. In terms of the second question on regeneration and the purchase of BTs, I won't talk about BTs so much. The council clearly has a responsibility for the regeneration of its area. I think it's important that councils do engage in that, and that they step in where the market isn't operating perhaps as effectively as it ought to be. In terms of Wirral's overall turnover, I don't think 2 million is that significant. My only comment, I suppose, or my only other comment would be that you need to make sure that where you're making investments in the private sector, that you're aware of the risk that it brings. So it's not as we've seen across the country. So the private sector isn't immune from things like the pandemic. So you have to be really clear when you make an investment that you're doing it for the right reasons, and that you have a clear plan as to what you intend to get out of it. But I don't think that particular investment is excessive.
Thanks very much, Mark. Thanks, Stuart. Thank you.
Thanks, Mark. So I'll bring in Karl.
Yeah, thanks, Chair. Yes, Mark, you mentioned in your report on the issue of deficits and the use of reserves, and you hinted or said that you thought it was a cultural thing. Would you like to expand on that?
So what we look for is whether there's a history of use of reserves. So and the willingness of organisations to make difficult decisions in terms of getting into a balanced position. So looking back over the history of Wirral, which I have done. So as part of trying to form the value for money conclusion, you do have a history of dropping into reserves. So, and that comes from a number of areas, either from overspend or just from, you want to move on to the next project. So I think it's something for you to think about. So in terms of, what do we want, and how do we get back into the current balance? Because, as I said earlier, having to use a capitalisation directive means that something hasn't worked with your financial management.
Fine, thank you.
Thanks, Mark. So Councillor Lewis has now gone to the meeting now, so welcome to Councillor Lewis. So Tony Cox, Tony, do you want to ask your question?
Thank you, Chair. Mark, a very quick one, really. It was indicated to us in this forum, but also in others, that if COVID hadn't have come to pass, and obviously we all wish it hadn't for numerous reasons, but if it hadn't, we would have actually had a balanced budget this year. In your opinion, having looked at the accounts, do you actually believe that would have been the case?
It's difficult, isn't it? It's difficult for me to form that view, because the a lot of things depend. So what I can say is that you set a budget with with a small use of reserves and a clear savings program. So whether you would have delivered that, I don't think any of us will know. But has COVID impacted on your ability to deliver that savings program? I think it clearly has. To be fair to officers and to the council, it clearly has had that impact. So I suppose it's not that I'm most concerned about. I think it's the future. It's how you behave going forward, because you do now have a significant deficit and shortfall in your finances, which you need to resolve.
Thanks, Mark. Thanks, Chair.
Thanks, Mark. Mr. Tony. Kate?
Thank you, Chair. Thank you, Mark. Actually, I think obviously, it's always hard to read auditors' reports, and especially as I've sat on the committee for a few years, and obviously they've always been very positive in the past. I think it's nice to know that our officers have been working hard, and that's come out in a lot of what you've said, that they've delivered on what you've been looking at from an audit point of view. And I think going forward, I think you're right, it is very serious what we need to look at, but we also need to be aware of our new projects going forward with the regeneration, our invest to save, and looking forward to generating that income. And I do think that that's very positive on the back of also what Councillor Burgess-Joyce said. So I do think there are some positives that we can take out of this. I appreciate what you said about the reserves, but I also think if you look at our income into the council, that's depleted over the years, and I think that maybe you are right, we have gone to the reserves, but that's only just to fill a deficit to ensure that we can actually deliver what we need to for the people of Wirral. But as I said, I'm hoping that going forward we should be able to deliver much more on the regeneration and invest to save, and I think it was just to sort of congratulate our officers on what you found, which is their systems work well, and that our internal auditors is certainly working well. Thank you.
Thanks, Kate. Did you want to come back on that, Mark? Or?
It felt more as the council had put that as a statement, Chair. So I don't have any sort of particular points to make in terms of the efficacy of the council's control systems. In terms of invest to save and sort of income generation schemes, the council needs to be really clear when it enters into either of those that it's going to get the outcome that it anticipates. So invest to save, that can be very worthwhile. So, but you need to be disciplined if you're going to put money into something, particularly if you're going to borrow to invest. Then you need to be clear that that's going to pay back and monitor it. And income generation doesn't come without risk. So if you're going in to generate income from, particularly from the commercial world, then as quite a lot of councils have experienced during COVID, then you can make losses as well as profit. So given the council's financial position, then you do need to make sure that, you know, any capital that you borrow is effectively used, and particularly because, you know, I suppose I would have said, under the capitalisation directive, the money isn't free. So effectively, you're going to borrow 50 to 60 million pounds that you, and then you'll capitalise revenue expenditure. So that creates a burden in itself in terms of the revenue payments and the principal payments that you'll have to pay back in the future. So you know, I'm comfortable with what the council's suggesting, but the discipline around the programs that it puts in place needs to be there if it's going to be effective.
Okay, thank you, Mark. Got Stuart Kelly next. Oh, ask your question, Stuart.
Thanks, Stuart. Yeah, it was just on our use of the reserves in supporting budgets in the past. I think you said in your remarks that officers had responded to you by saying that most of the expenditure that have been drawn down from reserves have been used for one-off items of expenditure. And certainly my understanding was a lot of the reserves were being funneled towards, if you like, transformation programs, you know, investor saves, things like that, that would deliver revenue savings in the future. In that sense, having heard the officer's defence, that actually, you know, the bulk of, say, the 18 million net for last year of reserve expenditure, the argument put is the bulk of that isn't there supporting ongoing expenditure. The bulk of that is being used for one-off and mostly, if you like, transformational expenditure, part of that, supporting that team. Have you audited that as a statement to say, is that true? Or is 18 million literally supporting ongoing expenditure within the council? Because that will be a more serious problem culturally than our drawing down reserves to ensure that we're able to make revenue savings and transformational change in the future. After all, that's what the government has told us to do, to use our reserves to shore up our expenditure in these difficult times, and to use it to make sure that we reconfigure services. How much of the 18 million is actually supporting ongoing expenditure?
Thank you, Councillor. So we did have a look at it. So it's quite difficult to go back and identify this in any precise nature. I was comfortable that some of it had been used on a non-recurrent basis. For other examples that we were given, I did struggle a little bit to come to the same view. So I still think there's something that the council needs to look at as it moves forward.
Yeah, and thanks for your question, Stuart. Thanks for your. Sorry, Stuart.
I was just going to suggest, Chair, that, you know, yourself as Vice Chair and the Chair might want to explore that a bit more with internal audits for the future, so that we can, you know, keep a watching brief on it going forward.
Yeah. So I'm just wondering, well, the officers want to comment?
Thanks, Chair. It's Diane here. Yeah, we did use a lot for one-off reserves, and we did, as Mark alluded to, we did try and evidence the use of those one-off reserves. There was around about 3 million on transformation that we drew down, which I think was it Councillor Kelly mentioned. So there are, you know, most of it I felt was for one-off use. It wasn't to support the budget, but there was a degree of elements of that where, you know, possibly it was needed, and we have tried to evidence that to the auditors through the audit process. Chair.
Thanks, Di. Daniel, did you still want to come in, or has Di made the point you were going to make?
Largely she has, but what I was going to make a comment on is around the fact that part of the budget setting process, Mark's talked about the value for money aspect and moving away from use of one-offs. The budget process that's active at present has been a very overt and clear message that the direction the council is in is to move away from one-offs. There are some difficult decisions that need to be taken in that respect, and the Policy and Resources Committee have engaged in that process really well. Proposals are being put out for consultation. That is progressing as we'd expect. The capitalisation directive figures have been amended throughout the year, so the process itself has been an iterative one where we've liaised with MHCLG and provided information. They've come back for additional requests, and that's been complied with. So the figures were, as Mark quoted, around 60 million to begin with across 2 financial years. That's come down significantly, with 14.7 million being the position in current financial year. And the spending review that was announced 17th of December and recent tranche 5 monies that government's provided for COVID relief have been built into the position as we look ahead. So there's a significant reduction in that respect. Just to give a bit of context to the figures that have been discussed. Thanks.
So thanks, Dan. So no, I'm sure speaking to Kathy, they'd be quite happy to know a lot as known as part of the work programme. Are you content with the answers, Stuart?
Sorry, Chair. Yes, I am. Sorry, I was just on a different tab.
Okay, no problem. Okay, I've got Jo Bird next, so I'll bring Jo in. Ask your question.
Thank you for all these reports. I was pleased to see that's kind of the answer to the question really of where does the overspend into the reserves come from, the 20 odd million, is listed on page 30 of the report, and which is page 228 of the pack. And it's spread across around 6 different departments. One of the unexpected loss of income was from Wirral Growth Company of £3.65 million. And I noticed that Wirral Growth Company is not consolidated into the account. It's not reported in any way. Actually, I can't find it on Company's House to this day, as their accounting period has been extended. And Wirral Growth Company does have a material impact on the accounts. The auditors talked quite explicitly about that, and it's in the report. So I'm kind of questioning the decision not to include the financial accountability of Wirral Growth Company in the audit, and whether that would be appropriate going forward, given that so much of our future financial sustainability of the council does depend on income from Wirral Growth Company and other kinds of companies over which we have no control, but on Wirral Growth Company it's at least a 50-50 mix. And Mo, the question is around communications and through the year. The auditor's report was actually, from my point of view, the first time that I'd seen that helicopter view and the overall picture of the decrease in the reserves and where it's come from and so on. It hadn't particularly come to committees that I'm serving on. And I think that is partly a result of COVID. Committees were cancelled from April to September because the resources of the council had to be focused quite rightly on prioritising the response to COVID. But it did mean that the democratic oversight and accountability, there was a gap there, which I think has an impact on the decision making. And so I don't actually know what is the current status of the reserves. So at March 2020, it was around £10 million. What is it now? Thank you.
Thank you, Councillor. I will answer as much of that as I can, and then hopefully Di will come in if I missed anything out. So, is it 31st of March 2020? There hadn't been a significant investment in the Wirral Growth Company, hence it wasn't able to generate the income that was anticipated, which has created a shortfall in the budget for that year. but clearly because the investment hadn't gone ahead, then there was nothing effectively to consolidate because the company, was still emergent. Yeah. So, and then in terms of reporting to the council, then I think I would have to defer to finance officers for that. So, thank you.
Thanks, Mark. Okay, Di, do you want to come in?
Yes, thank you, Chair. So yes, I was just going to iterate the Wirral Growth Company. There wasn't any turnover or expenditure reported at the 31st of March 20, so that wasn't consolidated for that purpose. And with regard to reserves, Councillor Bird, at the moment, obviously we've been drawing down on the COVID reserves as anticipated, but the use of other reserves at this moment, I would need to get back to you if that's okay, of the current position.
Yes, thanks very much. That's fine. But I am interested also in your opinion about going forward with Wirral Growth Company. Should we be reviewing the accountability and the financial communications with the company?
Yes, through the chair. Yes, what we'll do every year, we will look at the materiality of the growth company and decide whether material or qualitative or quantitative it should be consolidated, and it would be on an annual basis. I think, Dan, did you want to come in on that?
I was going to highlight the fact that the growth company activity is under continual review. So there's regular meetings about progress with the organisation, and from a board perspective, the company's first financial accounts are due for their financial year has ended December last year. So they're in progress in terms of production now. I mean, Di's highlighted, but the reason that the information isn't built into the 1920 accounts is a timing issue, that the financial activity didn't occur in line with original estimates. There's been a delay to activity, hence no inclusion in the accounts that we're looking at today.
Thanks, Dan. Mark, did you have something to add?
Yeah, just to I suppose just talk about investments and companies in general. So if you're going to invest in anything, then you need to do proper due diligence before you make an investment. So it's just sound business practice, and I would anticipate that, particularly given the council's financial position, that if you continue to invest in Wirral Growth Company, that you're really clear about sort of why you're doing so and the payback periods and sort of the risks that that brings to you as an authority. Sometimes local government's not very good at governance of its group companies. I make no comment on Wirral. I don't know how strong you are at the governance of your companies, but you need to act in the way a commercial firm would do with its group. So these are your companies, so you need to understand how they're governed. You need to understand that what they're doing on your behalf and the risks that they're taking, and you need to make sure that that's reported to you as a council.
Okay, thanks, Mark. You okay with that, Joe?
Thank you.
Okay, if there's no further questions, I'll start to wrap up. I've just got a quick question, Mark, and it's a processing type question. So Appendix A, you've got an action plan. You've produced an action plan, a number of high risks, which you've assessed. For each item in the action plan, there's a management response. Can I just ask you satisfied with the responses?
I was just checking the report here. So yes, as I said earlier, I think our working relationship with management's excellent, and when we raise an issue, then it's treated with due concern, and the responses are always appropriate in my experience. So yes, I'm happy.
Okay, thanks, Mark, and thanks for the presentation, and thanks for the work you've done, the audit. I think it's quite salient in terms of that lessons to be learned going forward. and I'm confident, given the new governance arrangements, there'll be a wider buy-in of the budget process from within the membership of the council. Okay, I'd like to move on now to the Merseyside pension scheme, but Stuart Basnett will be presenting that one.
So, Chair, at the last committee, so Stuart came along and he presented that report.
Right.
So I haven't requested that he comes today because he did it last time. So I'm more than happy to take you through it myself, but I'm just aware that members, one, will have heard it already, and but I can confirm that it's an unqualified opinion on the financial statements, and the only matter of import is just as we put an emphasis of matter in your financial statements on property valuation, there's the same emphasis of matter within the pension fund statements, because obviously they hold quite a lot of property. So if that, I'm more than happy to be guided by you and members of the committee as to whether you would like me to take you through the report in more detail.
Thanks, Mark. I do recall discussing the last committee. Unless members of the committee think otherwise, I think we just move on. Is there any questions to Mark? I think we covered most of it at the last meeting, so unless there's any additional questions, I think we can move on.
Thank you, Chair.
Okay, thanks very much. Okay, so we'll now move on to, am I correct in assuming we move on to the recommendations now? Phil?
Yes, Chair.
Okay, so the recommendation is that it's on page 1 of the reports pack, that we note the changes to the draft accounts and the external audit findings reports for Wirral Council and Merseyside Pension Fund, and 2, approve the final accounts, Council and Pension Fund, as presenting a true and fair view of the Council's and Pension Fund income and expenditure for the year and its overall financial position. So I'd like to move that. Do we have a seconder?
Yes, Chair.
Happy to second that, Chair.
Both of us.
Right.
You see, with the crowd now, Stuart.
I'm not sure if you can have what will look like Stuart and Stuart proposing a seconder.
Well, I was going to say, Stuart, if we say it's moved by Stuart and seconded by Stuart, that's really confusing.
Okay, I'll take yourself. Okay, that's seconded then, Phil. Do we need to vote on, or can we just agree by assent?
You can agree by assent, Chair. So if any member wishes it to go to vote, then if they may say so. Otherwise, after a reasonable period, it's considered agreed.
Are everyone happy to agree the recommendations by assent?
Yes.
Agreed.
Agreed.
Okay, thanks, members. I do believe that's our business concluded for tonight.
Yes, sorry, Chair, we need to also approve the annual governance statement as well, if you don't mind. That was the 3rd recommendation. Sorry, did I?
Apologies, sorry. Yeah,
Thank
so
you,
recommendation is to approve the annual governance statement 2019-20. Again, I move that. Do I have a seconder?
Yeah, I'll happily second that, Stuart.
Okay, thanks. Can we say that by assent?
Agreed.
Okay, thanks very much. Thanks, members. I do believe that's the end of the meeting. Thanks for your participation, and